in the Ukraine, 14%. They're slashing and burning. Just imagine what it was. They've cut interest rates 6 times in a row, and it's way down to 14%. It's just, and poor Brazil, things are improving there, only 12% unemployment. Hey, it could be worse. You could be Spain, right? Just crazy, right? I guess no matter how bad your situation is, it always was worse for somebody else. What a horrible, crazy world. So, anyways, let's play some happy music. Start the day out right. It's I believe a Thursday. It is a Thursday here in America. Approximately 7:30 in the morning. Approximately London lunch. What time is it in London? It's like 1:30, isn't it? 12:30. Cool. All right, so without further ado, let's get this party started. 12:30 sounds like a lunch break to me, right? So let's play the happy music and start Forex and.
From the OPEC crude production cuts.
Oh, is it happy hour already? Sorry, I got like a Java or Flash update 2 days ago, and nothing works anymore. I hate that. So it's super slow. What? It just stopped? Oh my gosh. It just stopped in the middle of the video. Are you guys still around, or did my whole PC die? No, I think I'm around. Yeah, you're here. Like, oh, you got a black screen? It's just funny. No, it just like stopped. It's not like it's paused. Hey, there we go. I love getting updates. It's just amazing. Yeah, isn't it funny? Like, who decided to screw it up? Like, you know what we should do? We should screw it up for hundreds of millions of people. Yeah, send out an update. Yeah. Yeah, one of my buddies is, I think, very senior up at Adobe. Maybe I should give him a call. What are you doing, eh? So, hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. If you're a Forex broker like me, you need quick execution. You need low commissions, fees, and spreads, and a responsive customer service in the few times that you'll need one. You would like real people. So we got all that for you and more. I'm here to earn your loyalty every day, 7:30 in the morning, Monday through Thursday. I'm here at Forex.Today. Where? At Forex.Today. Oh yeah, Forex.Today. I'm here Monday through Thursday. And hey, where, Mikey, where am I on Fridays? You're at FXStreet.com. Where? FXStreet.com? Yes, FXStreet.com. Oh, yeah, FX Street. Cool. So I'm at FX Street tomorrow, but only for premium members. Only for premium members. If you ain't premium, if you're not premium, right, you can't come. I'm Forex Speaker of the Year over at FXStreet.com, which is pretty cool. And then the following Friday is non-farm payrolls, right? So you can attend that. That's free for everybody. And it's their largest webinar. So you can do that. I'm over at NFB. Which is just funny because I was just confirming my schedule. I'm going to be out of town next week, and I'm going to be out of town the week after that, and I'm going to be in town the week after that. And I'm like, oh my God, did I screw it up and schedule something on an NFP? No, I don't think I did. Moment of panic. So anyways, life is great, life is grand, life is good, life is beautiful, and I believe you make it so. So thank you for making life beautiful. All right, so we're currency traders, yeah, and we got, pigs can fly from time to time. If you've never seen a flying pig, well, this is what it looks like. Okay, and notice the Asia fade, and the kick off the 50%, and the cycle level 122. And we're struggling here on the daily R1. But, if we can stay above this zone that we're testing right now, and that's why I'm bringing it up, it's sort of the here and now, in the moment, as they say in France. If we can stay above that, then let's giddy up on our way to 123. Any thoughts, any questions, concerns, comments? Yeah, Hammond, flapping his gums is what's happening in there. Anything else? You good? Shut up, came down, reversal. But it's been doing that all day, though, or all week, really. Right? I kind of started the week, with some profits, and then there was the whip sign stuff, and gave some of it back, and so I made some money, and then I gave it back, and then didn't make any money for a day, and now I'm making money again, and just it's probably just going to be a flat week. So it's just been one of those, right? Just been one of those. And it happens, it happens. Right? The big thing is to survive them, right? That's kind of what you want, like a bad week to be. You're like, how'd your week go? And you're like, man, it's been frustrating. I haven't lost any money. Not that you're trying to lose money. You're just like, that's a bad week. You're like, yeah, man, worked hard. Things were good, but the markets are choppy, and it was horrible. I didn't lose any money. There we go. Trying to get threesies on this. Life is great, life is grand, life is good. Did I tell you Arslan got accepted into the PhD program that he applied for? He sent me his test results. He got #1 in his class in the test for the PhD admissions test. #1 in the class. Ah, I'm like, oh, really? Couldn't have done better than that. Yeah, so anyways, good for him, huh? Yeah, I might hire him to do some work. I said, well, so, and he's studying finance, right? So a PhD in finance, I got to be able to give him something. So I talked to him about doing some things. Some beautiful trade setups here. Are you guys going through? By the way, William, I taught how to trade Forex, I don't know, 8 years ago. I believe he used to be a fireman. Now he lives in tropical paradise trading Forex all day. It's funny how things can change, huh? Beautiful analysis up here, guys. Really, really good job. Some pretty colors. Daniel's doing the pound Aussie, huh? Wow, beautiful trend. Oops. Where did it go? Where did it go? I lost you. There it is. Beautiful trade there, Daniel. Look at that trend in there. Have you noticed that Arslan is doing scalp alerts? It's posting scalp alerts for you when you see something coming up. Okay. I mean, just beautiful setups. I hope you're using the site. Just awesome to see you guys interacting. All right. So, anyways, go to the calendar. Go 1, 2, 3 foot in the water. Water. Okay. Durable goods. That's a big deal, right? Problem with durable goods is it's quite volatile. I don't know if you can even make a trend out of it. Okay. But it's important, and like I said, it comes down to like subcomponents of GDP and shows maybe activity going on in the real estate market. And I was explaining on Monday when we went through the calendar how it used to be the privilege of the President of the United States whenever the economy looked like it was slowing down, and politically, the president. Hang on.
100 GMT. Taking a look at overseas markets, European bourses are generally lower, but
TradeTheNews.com.
we saw markets open lower in Europe, move into positive territory, and then recede back into negative territory. After the better than expected GDP figures out of the UK that did put some upward pressure on interest rates and do some selling in sovereign bond markets. Yields are higher across the continent, led by the UK, which has seen yield back up 7.5 basis points to 1.22%. That's filtering over to the U.S. with U.S. Treasury markets lower and the U.S. 10-year yield backing up 3 basis points to 1.82%. We've breaking out of the levels we saw earlier this month in terms of the 10-year yield and going back to pre-Brexit levels across the board for interest rates. The dollar is generally weaker. The euro trading up very modestly, though, 15 pips. Cable 122.50, also up modestly, following that better than expected GDP figures. Over the last 90 minutes or so, we have seen some improvement in investor sentiment as oil prices have drifted up towards session highs, 49.33. We've also seen the parade of earnings continue. Earnings generally positive coming out of Asia and Europe, and we've seen some bit of a mixed bag here in the U.S. But overall, stock sentiment has improved here as we head towards the U.S. cash equity open in a little more than 90 minutes time. U.S. equity futures are pointing to a slightly higher open. The S&P Mini's 2138 1/4.
Never know when that guy's done. Just like he stops talking. Uh, so, anyways, durable goods. It used to be the privilege of the president. Just whenever the economy was slowing down or he needed some political pull, he would just call Saudi Arabia and say, "Buy some Boeing 747s." And like, all right, we'll buy some more. And so you'd get really that would show up in durable goods. That's why you got to strip out like transportation and stuff. That's why that's there. But it's very choppy. So, but uh, important, tradable, all that kind of stuff. But I think difficult to fold into a model. Okay, pending home sales. Once again, it's just showing deal flow, pending home sales, contracts signed, all that kind of stuff. Not typically the best time of year to be buying a house because the kids are already in school. So but we're looking at seasonally adjusted. We want to see flows and trends and stuff like that. So again, tradable, but something that is not necessarily uh, model type potential. A little too short, a little too chubby. But tradable, important information. But again, trends well established, and we just want to stay on trend. I don't think it's going to overpower like the U.S. presidential election or something like that, right? That is also on our minds. But we don't want to see bad numbers. Okay, and what the heck would the British be feeling confident about? That's all I'm saying. So they're forecasting -3. How about -12? Right? -3. You don't look like a -3 to me, right? Hey, maybe after a couple of beers, you'll look like a -3 to me, but you're kind of a -12 to start with. Hey, how confident are you? -3. Doesn't sound confident, but I think you're I think you're overconfident. So anyways, I don't know what to make of that. Okay. And then moving on to this other stuff, Asia is going to be a goodie. Um, Japanese jobs report, Japanese inflation, right? Japanese CPI and jobs, you know, household spending and stuff, all good, all good. Look, it was almost -5. Now they're expecting -3. Hey, that's a good trend, right? I suppose, I suppose the spending could get so bad that, if someone actually goes out and buys a ham sandwich at the corner store, that's a big improvement for the economy. I mean, it gets so low, right? Right? They need like an udon index or something. Yeah, front page news. Whoop whoop. Man, I'm so overdue for a trip to. I was going to say Asia, but I was just in China. But like Japan. And then if I'm going to be in Japan, I got to go to Singapore, hang out with Daniel. So yeah, man, overdue for something like that. Too busy, unfortunately. Oh, so I guess that's that. So we got a steady flow of news today. The 8:30 and the 10s, got some stuff on it. To me, it's just like greasing. The skids are greased. Shouldn't make a difference either way unless the news is bad, but both should be on trend. So at least it'll keep deal flow coming and stuff like that. Hey, Forex for life. Hey, tomorrow, can you put in like a real name? That'd be cool. In in Forex, there ain't no rules. Oh, 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 pound, you're so cruel. Why is copper moving? I don't know. That's a great call. And the thing is, the bottom of copper right now, just in the short term, is weekly R2. How can weekly R2 be your support? Well, that's a moo trade, isn't it? Right? Just like, what? So the thing with copper, so we spiked off of that, and you know where it stopped? The current high is 2.1641, right? And that just happens to be the monthly central pivot point. Not a penny above, not even a pip above. So I would say, hey, professional and institutional copper traders use monthly pivot points. Isn't that interesting? So if you're going to trade metals, you should say, I need monthly pivot points. Okay, so anyways, in love and war, there are no rules. Oh, 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 love, you're so cruel. All right, just trying to get my drawing tool going. Wayne, how did you discover the 21, 5.8 and all that? Trial and error. Honestly, I tried everything until something worked, and then I would ponder, why does it work? Why does it not work? And then why does it work on one time frame, and why does it not work on another time frame? And I whittled it down. For a couple of years. I was using 2060. So, and I remember trying 2550, and I think I started off, like breaking down MACD, and I studied Gerald Appel. I found, man, it's so long ago. The only thing I could find on MACD was written by Gerald Appel like 20 years earlier to my trading, and I bought something somewhere, and I think it was like an audio tape, like no joke, an audio tape and some photocopied, like manuals from a seminar or something, right? And so I'm learning MACD from Gerald Appel, the inventor, and he uses 13 in his settings, right? And I'm like, 13. So I tried 13 for a while as an EMA, and that didn't work very well. So then I thought, well, I'll double it and see if that works. And 26 doesn't seem like a good number, but 25 seems like a good number. So I started using 25 EMA, and the 25 EMA worked sometimes, it didn't work that, but it was close, So I dropped that down to 20, and 20 worked all right. And then I kind of went through the same process with 50. 50 worked okay, and then you got to go 50 EMA, 50 SMA, 50 EMA open, 50 EMA closed, 50 SMA open, closed, and you're trying all these things. And 50 was close, and it worked all right on the high time frames, but it didn't work well in the lower time frame. So I, twisted it out and put it to 60. So there, I kind of got it down to 2060. So I used 2060 for a year or two, and it worked fine. It worked just fine. And then I was learning or teaching myself about Fibonacci. And, it seemed like a bunch of hocus pocus, but it seemed like a lot of people were talking about Fibonacci, right? So I'm learning these ratios, and I'm like, it just doesn't make sense. Like, what normal person would use these things in their trading? I mean, it just still seems stupid to me. But nonetheless, it's a self-fulfilling prophecy, and so I started looking at the sequence, right? 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 366, right? And I'm like, all right, so that's interesting. I'm using 2060, and 21 is one of the fib numbers. And I thought, I bet you I could change to 21 and it wouldn't impact the EMAs at all, right? Like it wouldn't change it at all. But maybe that's why 20 seems to work. 25 didn't seem to work as well, but maybe I'm just randomly walking into a fib number. And I thought, okay, well, I could change it to 21. I remember I was in a meditation actually in the shower where I meditate, and this is a long time ago. You know, I mean, this is literally 10, well, more than 10 years ago, 12 years ago. I'm sitting having this meditation. I'm like, oh, I bet you I can change it to 21. And I'm thinking about it like that wouldn't actually make a difference to the EMAs because it's such a small change. So, but maybe that's why 20 happens to work. But what about my 60? 55 is quite a ways off of 60. And I remember like turning the water off. I'm drying off and I'm like naked and standing in the office changing my EMAs from 2060 to 2155, seeing if Fibonacci would help out. And, you know, I don't think it actually made a damn difference, but it just felt better because I'm like, well, maybe it is Fibonacci. I don't know. Right? 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 Just, yeah, just why not? And that's kind of remember, like, why not? Just, yeah, sounds good to me. Let's go with the 2155. And that's how I got there, for example. But of course, it's a little smarter than that. If you do some math, you'll realize that there is a common denominator in play over time periods. And you'll say, oh, right? Right? Paulie, right? So that's how that all comes together. There, you know, it's a little more than that. If you do the math, you'll see that there is, you know, a harmony going amongst the numbers. But you know, it's not a spiritual play. You know, it's just some tinkering around and in a logical fashion, and then adjusting to make it sort of emotionally, you know, acceptable. But you know, you could probably do fine changing on the higher time frames, like when you get to like daily and above. You probably just want to do things like, you know, 20-day moving average, simple, 50-day moving average, simple, 100-day simple moving average. You know, just out there, people are just, it's simpler. Right, you don't need to adjust so much because there's so little time per candle, right? But on the smaller things, if you're using 15-minute charts, for example, and hourly charts and 5-minute charts, you need a little more finesse. Is the green the 200 EMA correct? So Anthony, I just got my royalty check from Wiley Publishing, and I didn't see your name on it. You didn't buy the book. You're missing a whole subchapter on fair market value. Yeah. All right. Well, cool. Right on, Ryan. Beautiful, like a bull swan. Beautiful yet powerful. So, anyways, so that's that. That's the history. Yeah. Yeah. Well, I guess that's the good thing about doing these webinars. You know, where I did put a lot of time in. I mean, a lot, and I'm a little bit ridiculously crazy, and you're benefiting from that in a good way. Where, you know, I did try, you know, by and large, I tried everything. right? And so you just imagine that, you know, if this is your first year, second year of trading, you can just walk in and in a matter of just a day or two or a week or a month, whatever the you know thing is, you're learning from you're picking up stuff that seems relatively simple, but might have taken me 2 or 3 years to figure out. And I mean hard working years that are now common sense. I mean, I've literally taught thousands of people to trade, and it's become more commonplace. I see people post analysis around, and I'm like, dude, you're using my charts. Like, it's amazing because that guy has gone on to teach someone, and that guy's gone on to teach someone, and now it's weird because it's becoming much more common knowledge. But you got to remember, like when I first started trading, people didn't even have charts. There were no webinars. I was this radical guy. It was weird, I'm telling you. I was this radical guy that was using, you know, online conference software to show people how to trade technical analysis using charts on the FX market. And it was like ridiculous. Like it just, people didn't do it. And they're like, what's foreign exchange? You know, it's like it wasn't talked about. It was new. It was completely unregulated. You know, FX Street had like chat stuff. You know, it was a very, very strange thing, and there were just no books. There were no retail experts. You know, it was an industry for big bankers at the top of, you know, banks or insurance companies. I mean, nobody even heard of the foreign exchange market. Like it just was something you did when you went on vacation, right? Do you remember those days, Mike? Yeah. So it was just it was a very, 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 very strange place to be. So like just to say like, oh yeah, let's trade these 5/8 crosses off the 2155, and let's throw down a pivot point. Let's do some intermarket analysis. What's going on in copper? Let's play that out somewhere else. Hey, oil, and let's look at CAD. None of that existed when I started. No one could even say like, watch oil, trade the Canadian dollar. You know that it's very, very simple and elementary. But when I started, that didn't even exist. Because no one even had a chart that had oil. No one had an oil chart and the Canadian dollar chart at the same time. You had to be on different desks and stuff. Like to make a trade, you'd have to call different people in different departments, and they didn't even use charts. So no one actually kind of stood there and watched in real time. It was just really strange. And now you can just walk in and in a week pick up something that took 3-4 years to figure out. It's kind of interesting, right? Good for you, I suppose. Right on, Daniel. So you got another 1,000 pip month? That's beautiful, man. High five. I remember when Daniel and I started a mentorship a million years ago, I'm like, so what are your goals? And he's like, I'd like to make 200 pips a month, but consistently. I'm like, let's get you to 1,000 pips and see what happens. And he's like, 1,000 pips. I'm like, that's impossible. First month, boom, 1,000 pips. And he's like, oh my God. So, but it's not that easy. You still gotta work your butt off. So I'm glad that, after all this time, it still comes together. Yeah. But Daniel's a very, very hard worker and very, very dedicated. James is talking about 30 years ago, you had to draw your own charts. I think most people actually just subscribe to a service, and like once a month, you'd get a book, right? Like I'm trying to show it, like that. A book like that thick with 1,000 pages. It cost you probably $1,000 per month to subscribe. And the book would show up and you'd scramble and you'd look at like old school stuff. For commodities, I mean, of course, you'd look at daily and weekly charts, and they'd update the candle. But you'd look at daily candles for if it's commodities like for corn or something. You're like, oh man, look at that! Look at the daily EMA, on this, literally. You'd have a day chart, but then there was like commitment to traders report stuff. The COT stuff for commodities were really, really important, right? And so you'd look at that, and that's why we still kind of look at it from time to time, because it would tell you like the open interest on things, and how many bulls and how many bears. So you'd look at all that and whether they're institutional or speculative and big or small, that kind of stuff. But you would subscribe to all of that stuff, and weekly or monthly, you'd get updated, right? And then back then, let's say 10 or 15 years ago or 20 years ago, if you're a currency trader, you looked at things like, M2, M3, levels of money, much more. I mean, we don't even do it anymore, but other thing, just because central banking has changed in 20 years. So I don't know, it's a very interesting life, and I'm glad to be living it with you. And I think your timing, if you're just getting into Forex, the fact that you can just pick up something that took me 4, 5, 6 years to figure out, and all of a sudden you sit down and I can teach you in a month. I mean, how awesome is that? So anyways, let's get back to this. Maybe some upside moves, or what? What do I keep teaching you to do? Stay with the trend, right? You got to take this one into account too. And if you're a bear, you stay a bear. You just pick your lines, right? So I believe the reason we have this gray zone there, yesterday, we were thinking about things like, have it pull back, retest, 109.50. Like, it's not even 110. And we got pretty close, actually, right? And you want to look for those opportunities on the higher time frame, right? If you're a bear. So the message is, even though it's going up, you don't have to be a buyer, okay? Because that means you're, chasing the market. You're a price taker in a sense, right? Hey, South African Finance Minister Gordham, not worried about a tax revolt. I find that revolting. So if you are a bear, you simply pick your lines. This is the one line we identified yesterday, and it dropped like a ton of bricks off of that. We're still going to play that. Then there's going to be 110. You just sort of, because of the psych level, you're just going to have to consider 110. You got 200 EMAs, you got pivot points. There's all kinds of things where you could say, maybe I'll sell here, maybe I'll sell here, maybe I'll sell here, maybe I'll sell here. And the whole time you're just simply waiting, right? You're waiting like the girl at the end of the bar. She's sitting there thinking, come over and ask me to come over and buy me a drink. Come over and buy me a drink. Just got to just sit there and wait. Sit there and wait, right? Pull out a cigarette and see if anyone comes over and lights it for you, right? Game on. So just decide what you want to do and wait for it. Okay, on this daily, doesn't it seem like it's going up to the 21? But the 21 is falling. So wouldn't the perfect place to meet be 110? Just a thought, right? So as you can see here, we're 13 minutes and 19 seconds away from durable goods. Ho, 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 ho. In trading Forex, there ain't no rules. Yeah, you're right. You got to get through that 950, right? So, right. So put it over here maybe. Right. So my only message is if you're a bear, pick your lines and sell. Like if you're a bear, wouldn't you set up a double top at the weekly central pivot? Like, isn't that what you're doing? Like right this second? What? You got your weekly central right there. So you would be setting something up here, right? Oh, we talked about USDN earlier in the week too. Oh, sweetheart, you're so cruel. Okay, that's the S&P 500. We were here, was it just yesterday I drew this line? Yeah, I guess so. Yesterday, New York. Look, nice little line. Lufle tuliumum. What do you think about that? But again, a death spiral, right? Death spiral. I mean, that's like, trying to hug an alligator. You're like, whoa, we're spinning. Wow. Wow. But if you can survive, at least maybe a new trend is born, right? Boom, boom. Notice how we kick off visual support, weekly M2, by the way. Up, down, using weekly now as support. Okay? So what is the play? Even though there's lots of volatility here, what's the play? And it seems to me double or triple bottom weekly M2. So therefore the target is way up here. 2155 by chance. 2155. Back up to this zone. Okay. And this is where they report, they're like, the S&P 500 closed flat for the week, right? And it sounds really boring, right? And people are like, man, I hear the S&P 500 hasn't done anything this year. And you're like, what are you talking about? Right? Oh, well, I heard on the radio that investors are really upset that the S&P 500 hasn't done anything all year. It's just been flat. So that must be boring. You're like, boring? Boring like a bar brawl, right? I mean, look at that. Oh, look, nothing happened. We'll close the week flat. We'll close the month flat. We'll close the year flat. Uh-huh. That is just incredible, isn't it? So here we are and heading up. Okay. And so what's the big analysis? There was some support. There's some support, eh? So pretty cool, right? And if you don't buy it there, then you buy it down here. And if you don't buy it down here, you buy it down here. And if you don't buy it there, you're not a bull. Okay. We're just playing this new range, right? So the new range is up here. So whatever. Right? Heart attacks are boring, I suppose. But imagine though you were a long-term investor and you bought the S&P 500 in 2010, right? And that your clients call you up or whatever, maybe you're the manager, but you're like, oh well, nothing happened this year, but we have high expectations for next year after the election, right? The market's going to melt up. And you're just kind of telling your clients, yeah, well, we only made 3% this year, but we're thinking 7% next year. Maybe this year will be better than the last, right? But if you're a trader, it's moving. But if you're an investor, right? If you're an investor where you bought down here and you want to know how much money you made this year, well, look where we are, right? So, and then what we're even looking at now, going into a daily, what we're looking at now is, we started the year kind of this area, right? So let's mark this. This is where we started the year at 2100. We're at 2150. So we moved 50 points on the S&P 500. There's the low of the year. Here's where we are. And for some people, they'll say nothing happened. What happened this year? Nothing. We're up like 50 points. Well, Ryan, one of the things I read a lot this year was how money was going to passive funds. Excuse me, passive funds, because they have very, very low fees. Okay? But that's what my message was back even before all of this. Way before this, but this is where you just buy the S&P 500. That's it, just an index. And because of central banking policy in the United States, it's going to go up because that's what quantitative easing does. That's the whole point. Increase asset prices. Well, this is the stock market going up. The stock market's an asset, right? So why would you be in a hedge fund if you're ultra wealthy, right? But then you start hearing on TV and the news and all this stuff that now people are putting money into passive funds because the fees are so low. But well, why the hell would you do that now? You'd have to be an idiot, just a lump of dump, to do it now in 2016, right? I mean, why didn't you do this back then when you didn't have to pick any particular stock? You just had to be in the stock market, right? So now that we're here, why would it go up any further without quantitative easing? There's no reason for it to go up any further without quantitative easing. So if you want to beat the index, this S&P 500, then you need to actually pick the right stocks. Some stocks are going to go up, some are going to go down, most are going to move sideways. So if you can pick the ones that are going up and buy them, and maybe even short sell the ones that are going to fall, and just kind of stay out of this, then now you're a hedge fund, let's say, right? You structure yourself as a hedge fund, and you're like, in your disclosure document, you say, we pick stocks, and we like particular types of stocks, and and we're not going to buy these other types of stocks, like, let's say, international stocks or whatever. You need to tell your clients what you're going to do, but you're a stock picker. You're not just a random index. So to beat the S&P 500, you do need to be in the hedge fund. So it's incredible to me that all of a sudden you start hearing all this talk, like hundreds of billions of dollars coming out of hedge funds and going into passive indexes because they're cheap. I'm like, well, that was a great idea 7 years ago. And wow, it just, literally my head explodes like, oh my God, you're doing the right thing 7 or 8 years late, which now means the right thing 7 years ago is the exact wrong thing to be doing now. You need to be getting out of the active fund or the passive fund, the index, that's not going to produce any alpha, and hire someone that can provide alpha and pick the right stocks to be in. Because some sectors are going to improve with interest rates rising. Some sectors are going to have diminished returns with interest rates rising. And now you need to be on the winning side. You need to pick winners, not just sectors. So you ever hear like, why face single stock risk when you could just buy the whole sector with sector ETFs and spiders and all these different things, like all these marketing tools? I'm like, well, that's a bunch of socialist pig dog nonsense. Why would I want to buy the entire sector? Why would I want to buy the winners and the losers and the mediocrity in between? You see what I mean? Like, what kind of idiot would do that? Why couldn't you just do the work, do the analysis, find out what's mediocre, find out what sucks, stay away from all those, and buy the one or two that are winners so you can make money? I mean, golly. So anyways, lots and lots of marketing tools to sell people stuff. So anyways, I don't know how we got to that. So anyways, pick a winner, make some money, do your job, goal, dang it. Right? So S&P 500 is trying to head up. Looking at Dixie, seems to be trying to regain its strength that it had earlier. It was a little bit weak for a bit. Chinese yuan actually strengthening a bit, which is interesting with the dollar kind of going up. Yuan's kind of going up more, but again, weekly reversal pivot points for the Chinese yuan. I mean, it's being played perfectly. So quite clearly, traders of the yuan are trading weekly pivot points. Did anyone specialize in Chinese yuan or Singapore dollar? Wink, wink, nudge, nudge. I think Daniel would be good at doing stuff like that. Should specialize, guys. I mean, think about it. You could start a fund. Okay, you could start a fund as a Forex trader, a Forex fund, Forex managed program. There's different languages depending on your jurisdiction and domicile and stuff. But you could specialize and say, I trade the Chinese yuan. And people are going to say, wow, I'm reading all kinds of news about that. And it's like exotic. You're like, oh, how do you get into all that? Okay, 258 on the jobless claims, durable goods, negative, woot, woot, negative, 0.1, negative. X transportation as expected. And a little bit of weakness on the dollar, I think. Wasn't good. Wasn't severely bad, but it wasn't a good number. Weekly jobless claims 258, 4-week average 251, which is like a multi-year low. So 258, a little bit on the high side. So somebody lost a job somewhere. But going back to a fund, guys, you need to specialize. You need to be an expert. You can't be a jack of all trades. You don't hire one person to build your house, right? You don't hire one dude that, digs the foundation, then puts up all the framing, and then starts throwing together the electrical and the plumbing, right? Well, yeah, you could be a pound yen trader specifically. You could. I would say you would want to put it together more like a product that somebody could buy if you're working with a big institutional investor. So it could be more like pound only. You could be like, you could sell something, for example, that's say this fund is ultra short British pound due to Brexit exit risk, right? And the lifetime or the life frame or the life cycle of this fund is probably 5 years. And because of what we foresee in the British pound due to Brexit, because of our fundamental analysis of that situation, this fund is ultra short British pound. So you probably wouldn't just do yen, but you could say, we are ultra short pound. That's all we're going to do. And then we based on our alpha, we pick the other currencies to trade against that, right? So it'd be more like an ultra short British pound fund. Okay. And by the way, I made a similar suggestion years and years and years ago when the euro was way at the top, because we had predicted it 6 months in advance, maybe 9 months in advance. And we were waiting for all the different fundamentals to come together, and they eventually did. And I suggested you could start, and I even emailed somebody, David Pegler, actually, if you know David. I'm like, hey man, we should put together a euro ultra short fund. But I made that a public suggestion too. You could have a fund back then that all it did was sell euro starting at what, 140? And you wake up in the morning and you sell the euro. Right? You guys remember the song? You wake up in the morning and it's 1:45. What do? You sell the euro. You sell the euro. Right? So that's it. That's your job. What do? If euro's at resistance, I'm going to sell it. What's the complication? So you could have a fund like that. But another specialty, I think a lot of people are interested in yuan. So what do? Oh, well, I run a Chinese yuan foreign exchange hedge fund. And we believe China is using, currency wars to devalue their currency to stabilize their economy and improve exports, in particular under the conditions that Europe are in. So, we're ultra short the Chinese yuan because of, what's happening in the Chinese economy, but also our expectations of interest rates and monetary policy out of the Federal Reserve and its impact on the US dollar. So that's what we do. And, after that, it's all models and bottles, right? Right? You're like, no, 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 no. I only drive the yellow Lambo on Tuesdays. Go get the other one. No, 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 no. It's Thursday, the blue one. No, no, not the light blue one. That's cobalt blue. No, no, no. The dark blue one. You might think it's black, but when you get it out of the sun, it'll be blue. You're like, that's my Thursday Lambo. Yeah, it's purplish, right? And the license plate says Purple Wayne. Purple Wayne, Purple Wayne. Yeah. It was funny, when I bought, I haven't had a car in years now, but when I bought my AMG 55, my wife, just out of the blue, she's like, I bought you a license plate cover. I'm like, oh, great. And then she gives it to me, I open it up, and it says, profit on it. I'm like, oh my God, that is pretty cool. Right? I think I got this spelled right. Wow, this is really slow under this new Java update or whatever it was. Wow, it took me like a minute to type that out. But anyways, that's what it said, profit. Or maybe it's the other way, profit. Yeah, I think I got it backwards. The money, profit first, profit. But anyways, I'm like, oh my God, honey, that is so awesome. You're a keeper. All right. So anyways, S&P 500 moving, right? So how many people are actually going to seriously sit down and think about specializing so that you know where you are in the world? Oh, you like the AMGs? Yeah, I don't think I'd buy another one though. So some of you are, okay, some of you are. I mean, so here's your next issue then. How do you pick? And you're going to have to like think about what's going to happen over the next, I would suggest 5 years, because you don't want to start a fund that specializes and then, the winds change and the trend stops and you're like, now what do I do? Okay. But you kind of need that. So imagine you were running a trading floor and a client came in and said, okay, well, we're a corporate client and we have a lot of exposure to British pound. It's just the type of business that we do. Looks like some dollar strength or yen weakness, maybe. Yen weakness, it looks like. Yeah, the yens are Oscar Mike. Cool. So anyways, the corporate client comes in. They're like, yeah. We're overexposed to British pound. We just got a lot of clients there. We do a lot of business. But this Brexit thing is freaking us out. And we're like, oh, that's cool. Right on. Well, let me introduce you to the pound team. Right? I'm like, Ryan, Rob, Tino, get in here. Right? And you're like, all right, these are my pound guys. Um, so it looks like you're exposed to the British pound and you're worried about the pound weakening. So we don't need the appreciation stuff because you're already long pound. So Rob, go away because you only buy pound. So that leaves, like Ryan. Ryan, all right. So all you do is short British pound. Great. Well, we're going to hook you up with this client, because they do a lot of business. They're exposed to the British pound, and they're worried about its value falling significantly, and that's a real risk for them. So you will short British pound when needed, and the profits that you make will offset the losses that they make in the cash market. And they're like, oh, wow, this is so great. You're doing something custom for us. We love it so much. I'm like, yeah, but we're going to charge you a lot of money. And then that works, right? Well, James, it is plausible, but what you need to do is do it like yourself. Be a specialist, right? Because once again, you can be a jack of all trades and just convince somebody to give you a huge chunk of money and then you go out and play with it. But the bigger the money, so that might work for friends, families, and fools, right? But the bigger money is going to want to know how you fit in their portfolio. So it depends on what you want to do. Yeah, well, there you go. See, that's just dollar Canada, though. I would say your specialty should be like, let's say, Canadian dollar, so that you're open-minded to. There might be better trades than, dollar CAD, right? So CAD Swissy, for example, Euro CAD, Pound CAD, CAD Yen. Okay, I'd open it up that way. And oil, yep. I mean, if you do it that way, you basically are trading oil. But if another thing you can consider is just commodity currencies. Okay, If you worked at a bank, let's say your first job at a bank as a trader, they're not going to put you on the majors, right? So you'll be doing like Eastern European or Latin American currency stuff, right? So like your first job might be zloty and Hungarian, what are they, francs, the huff, zloty and huff, right? And so maybe you can consider that. Maybe you could say, well, that's the type of job I want to get. I want to work for a bank that will pay me a salary and a bonus and have vacation time and a retirement account, right? Sounds like easy, right? I was talking to somebody the other day that, again, actually works in the foreign exchange desk at a bank here in Atlanta. It was actually his friend worked at this bank. He's like, "Oh, my friend's a foreign exchange trader." I'm like, "Oh, great." So, and he works at this bank. I'm like, "Well, what do you think he makes? 200-300 or 2-3 million?" He's like, "Nah, I think he's pulling in 700,000 or 800,000." Um, you know, that's a lot of money in Atlanta. It's not a lot of money in New York. It's not a lot of money in California. That's a lot of money in Atlanta just to kind of like wake up in the morning, put your suit and tie on. Of course, there's no suit and ties anymore, but get dressed and get your coffee and get in your Mercedes and commute into work and I mean just like 800,000 to just play with the bank's money and it's not bad, right? So you could say, well, that's the kind of life I want, right? Never have a worry about funding, never have to worry about actually meeting with clients and keeping them happy. You're just sitting on a desk and deals come in, they call you and you place the trade, right? It's just not a problem, right? They just have all this capital market stuff going on and these currencies need to be moved and somebody calls you up and like, make this trade. Great, done, next. And you make 800,000 for that. That's good, right? So if you want to specialize, and let's say if you want that first job and you want to be in New York, and there's these people that kind of know Forex, and there's you could say, well, for the last 5 years, I've specialized in Eastern European currencies, and I visit the areas on vacation, and I'm very familiar with what's going on, and I track the central bank of Hungary, you know, and they're like, oh, good, because that makes you way more competitive than everyone else applying for this entry level desk job. And you're like, yeah, but I'm already an expert. And all of a sudden, 3 years later, you're the head of Eastern European and emerging market foreign trading desk for some big bank. And you're pulling in 1.5 million a year. And you're like, this is like the greatest thing in the whole world. Right? And you're teaching people about, right, we're coming up to the 21 EMA. What do you think we should do for the Huff? What would you do with the zloty? Be careful of that 200. Life is good, right? So I'm just kind of putting you there, putting you in the perspective of this is how the world works. If that's what you'd like, just a 9-to-5 job that makes a ton of money, and you just sit there playing with foreign exchange all day, no, right? Don't have to worry about raising money. Don't have to worry about talking with clients. You just sit down and trade. Then that's what you need to do and say, well, I want to be the head of I want to be on a desk. Typically, the first desk is going to be emerging market stuff, and I need to specialize in that. So 3 years from now, I'm knocking on doors, and I can talk about Hungarian central bank policy, and I'll name all the players. And you're just like the most qualified person on the planet for that job. And you get your foot in the door, and pretty soon you're running the show. Okay. So envision it, and then put a plan together and make it happen. Right? All I got is a red guitar, 3 chords, and the truth. All I've got is a red guitar. The rest is up to you. Peace on earth. May the pips be with you. May our profits be above average. We'll see you around, huh? So remember, tomorrow I'm at FX Street. So if I don't see you over there, have a nice weekend, and I'll see you again soon. Cheers. Oh, and I'll be in Boston on Monday and Tuesday too, I think. So I'll see you from Boston. Cheers.